The rally here is pretty incredible. Pretty incredible. And what's the news? What's going on? Well, to many people's shock, the US and China essentially shook hands. They essentially said, let's pause things for 90 days and let's come to a reasonable middle ground. That offers substantial peace in the realm in terms of global trade. Because let me tell you this, if China is willing to work with the US, the number one rivals, right? Rivals, US and China. If the rivals shake hands, what do you think happens to all of US's allies? If the rivals are shaking hands, you bet your bottom dollar the allies of this nation, the US, are going to step in and make deals. Because if they're making deals with China and you haven't made a deal with the US, a fire has been lit under the proverbial you-know-whats of all the other nations who are not yet this far along in the trade deals. So where are we at? The market says, oh my gosh, we're going higher. That's what the market says. The market says, boom, that's what we needed. Because again, if people kind of laughed in the face of like, oh, UK deal, that's happening, haha, that's we knew that one was going to happen because the US and UK are like best buddies. But then you got China, the number one op to the US, comes in and says, let's make a deal. Up we go. That was the big one. That was the big domino to fall. And instead of the big domino falling, like this is how we kind of all thought trade was going to go. Like this is what we thought. We thought that, the big one was always China. We thought like, okay, UK, we knew that one. India, right? Like we think India's going to, and then we thought like maybe we'll get somewhere with Europe and Japan. No, we actually just saw the biggest domino, China, just fell. And we said, deals are coming. S&P, when I look at NASDAQ, I do want to be a buyer of this market. Price action seems to be decisively turning bullish, right? We've got higher lows, higher highs. So those traders are looking bullish. We've got, well, here's maybe something for the bears. Nope, not even for this. The 618 got declined, rejected, right? So sellers probably tried to hold this level. Boom, we broke through that level. Resistance consistently has been taken back from the bears to the bulls. So again, on a technical basis, I think it's kind of a hard thing to defend at this point. And I saw this, I remember in 2020, guys, this was one of the craziest things. One of the most polarized I've ever seen the markets was in 2020 when this thing had just crashed immensely. Everyone had this drawn on this chart. Did anybody else, just curious, did anybody, Lincoln says bears back into hibernation. Yeah. Did anybody else have this drawn on their chart? I'm just curious. 2020 daily chart, Fibonacci retracement from the high of the move to the low of the move. I can't tell you just from memory how many people I saw in the trading world that had this exact chart drawn up. And every time we would take one of these levels, I noticed this was a lesson to me. It was like, sometimes a pullback, you can tell it's not a pullback by the way it reacts to the fibs. So like you had this level get checked, we stopped there, and then we just bulleted through there. Then we did it again. We stopped, and then boom, we shot through it. Came back, retested it, came up to this level, respected it briefly, higher low, boom, we took it out. If you see pullbacks in this type of environment get turned into breakouts, you have to acknowledge that. So take note on a technical basis, when we are looking at the S&P 500 and people are record-breakingly bearish, I'm not making that up. If we take a look at the AAII Investor Sentiment Survey, we've talked about it a lot on the channel. We had 11 straight weeks where people were greater than 50% bearish, okay? The bears were very bearing, okay? And so There was 11 straight weeks. It was a record-setting duration to have a 50% or greater read in the AAII Investor Sentiment Survey for bears. Massive, right? Massive bearishness. And so in this circumstance, right, what do we see happening? We see the ultimate short squeeze. We see all the bears running for the hills, running for the woods, I suppose. They're back to hibernation. And it is like a bull run, if you will. So I think that's where the name comes from, the bull run, right? They're just completely wiping the sweeping the decks with the bears right now. And well, could that change? Of course it could change, but timing that has been a tricky thing for a lot of people this year. A lot of people have gotten themselves into a lot of trouble trying to say, you know, this is where sellers are going to take over. This is going to be where, like maybe they do, but I think the most likely scenario here is that we are probably on to the next story, which we know from the excitement around when we saw the elections going on. The excitement was we're going to get tax cuts and deregulation in corporate America, and that theoretically could boost, you know, business profits. And so I think we're possibly on that side of things now. I think we're on the downhill. Like this was the trade, you know, dynamic. I think, right? We peaked out in terms of concern. And I think we're like here now. Like I think we're not here. We're not here. I think we're like here. Like a lot of the trade worries are now behind us, at least for now. If you'd like to see more of our free daily chart of the days, make sure to join our Telegram channel if you have not already joined. And if you are already in the Telegram channel, make sure to hit that thumbs up button to support our work. Also, quick reminder that if you're looking for free tools and free education in the trading space, head over to a1trading.com. You can check out our free technical, fundamental courses and much more.